Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100 as earnings are winding down. Chris, it's great to see you as always. Welcome back to Trade Talks. What were your overall thoughts with earnings? They seem okay.
They were all right. The blower bar kind of helped a little bit, but if you look at earnings per share, it's, the bar is lower. So are we finally getting to the before earnings season and over the last couple of quarters, you talked about the right PE ratio, right? We got to the price. Now here comes the earnings, right? You have a nice haircut, but now the markets are kind of shaking it off a little bit. Companies have been relatively hurt more on misses than rewarded more on gains over the last couple of years, right? And it seems that, that's held true, but it seems that the gains, at least this quarter, and there were many of them, were hurt more so than the winners being rewarded. So the average gain for a Nasdaq 100 company on a positive earnings beat is about 1.4% prior to the last quarter. We're up at most of them have that beat are up about half a point, 0.5, 50 basis points. To the downside, it's about 3.2% on a miss, and they were a little bit closer to 4 for the last quarter. So you seem like that kind of reward mix has been different. Now, granted, some of the big boys can kind of skew that whole methodology out the window. Look at Amazon's beaten up, beat and raise, and one point they're up over 9%, close to 10 before selling off a little bit onto Friday. And Apple was down about 2%, ended up being down over 4 on Friday. So again, it kind of evens out. So again, the misses seem to be hit harder than the winners being rewarded for past performances. And if that's the case moving forward, it's going to be basically, what are you saying about guidance moving forward, which is what we always say earnings should be nowadays. Before prior years, you're rewarded for your quarters past. Now you got to look forward to, what's the headwinds here? Is there still inflationary concerns, supply chain issues, et cetera, et cetera? So that's where that impact to the earnings moving forward needs to be. We got a nice taste of companies making money for a slowdown quarter. Expectations are that they're going to be slowly ramping up. The good thing is, with the way the non-farm payroll numbers came out and the GDP came through, the soft landing seems like it's going to be appropriate, at least in the near term. For the September meeting for the Fed, it's an 80+ chance that there's going to be no hike. So that should bode well for companies into the middle of the next quarter. So that should be good there as well.
All right, Chris, let's take a look at some fresh technical levels on the index.
So it's interesting, we were talking last week, we were talking about support, and the index itself closed down 3% for the week. The first time in months that's had that. You got to go back to March for a negative read like that, but still up over 40% year to date on a total return basis. We talked about support being in the 15,200, 15,300 level. We hit that level last week and we bounced, which is nice. Support was actually held here, and the index is having a positive day. So the index opened today at 15,355. We're north of that. We're up about 0.5% on the day. On Friday, we closed at the lows close to 15,260. So look for support very tight here at 15,320, then 15,250. Again, major support is the 50-day simple moving average, which is just north of 15,000 below. Resistance, 15,450, then 15,550. The test basis here is going to be 15,365. We close above it, you're going to get a bullish read for the rest of the, at least for the start for tomorrow. We close below that, it's going to be more of a negative read, even if we do end up closing a tick above where we open at 15,355.
And let's get a snapshot of the breadth in the index.
Yep, 70-30 strong. Really big boys are on the left side. Apple is dragging it down. If Apple wasn't down about 2% today, this index would be up well over 1%, 1.5%. That's detracting 32 points. We do have three companies making new 52-week highs today. Signs of bullishness is right there. We haven't talked about that in a while, but the last couple of weeks we've mentioned it, that you're seeing more Nasdaq 100 companies make new 52-week high. Again, a sign of bullishness to the market, especially for the large cap names that are away from the big 7.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.